Good morning. I'm joined today by the management team from Watkin Jones, who are here reporting record results for their full year to September 2017. Many congratulations, Mark.
Thank you.
Alongside the results was also the announcement that you've announced your intention to retire. Can you give us a little bit of flavour around the reasons behind it?
Yeah, I think due to some personal reasons, I feel that it's the right time for me to step down to get a better work-home life balance, and I think with the business being in such a strong position at the moment with great visibility, it really is an ideal time to recruit a successor. I've given my assurances to the board that I will remain in my position for as long as it takes to find a suitable successor and for a suitable transition period. The board have indicated their desire to keep me in the business in the future in some format, and I would hope that that will work out in that way. So I think it's the right thing for the long term of the business. A
possible non-executive director role then?
It's one of the potential opportunities, yes. So we shall see what the future brings.
Obviously the family still holds a 30% stake in the business. Is it the intention to hold on to that going forward?
Yeah, very much so. We as a family very much believe in the business going forward, and we think there's still a lot of upside in the business going forward as well. So and I think that helps and hopefully gives people reassurance that the stewardship will be left in very capable hands.
Thank you. Okay, moving on to the results themselves. Obviously student accommodation is one of the bigger drivers within the business. Can you give us a flavour around the current development pipeline? Yeah,
we've still got a pipeline of just over 9,100 beds across 23 developments. We plan to deliver 10 schemes this year. They're all forward sold. We plan to deliver 7 schemes for 2019. 5 of those 7 schemes are forward sold. The remaining 2 have planning consent and are due to go out as part of a larger portfolio of sales which will include 2020 deliveries. And again, we should see, and we expect to see, some strong interest in those schemes, which will give us visibility on our 2019 deliveries and good visibility on a large proportion of what we plan to deliver in 2020. We'd expect to conclude that sale in the second half of 2018.
Okay, and are you still seeing strong rental growth, which is driving the interest behind this?
Yeah, strong rental growth, but real demand from institutional investment, which is really driving a lot of demand for the stock, whether that be completed stock, income producing stock, or through a forward funded mechanism. We remain very confident in how that's looking at the moment.
And the drive to quality is still ongoing from the students themselves?
Yes, I think that it continues as students recognise that what they get in purpose-built student accommodation is an all-inclusive rent, but more importantly, the facilities are modern, secure, warm, high-speed internet, and a very good social opportunity as well. So we continue to see that happening.
Okay. Looping back then to the buyers, are these largely domestic? Are you seeing demand from overseas as well?
We're seeing more demand from overseas at the moment, and I think what we have seen is some of the domestic clients that we've worked with historically are sort of rebenching their sort of returns that they're looking for to come back and be more competitive in the current market. So, as I say, when we put the portfolio out, we really expect to see a lot of interest in that, and we're hopeful that will prove positively for us.
Moving on to the build to rent side of the business then, you've now got 5 sites secured and 3 developments under negotiation. Does the geographical spread of these mirror those of your student properties?
No, not at the moment. We're sort of targeting London and the suburbs, and really commuter distances from London and the south coast at the moment. So those appear to be where the best opportunities, where the institutions want to be initially. I think it will expand out into the remainder of the UK, but that's where I think we'll get the best momentum in the early days as the asset class matures.
And how are you finding the availability of land and the prices that you're able to achieve for these?
I think the availability of land isn't the problem. I think what we need to find is how we get the momentum into the asset class. So institutions, I think everybody's still sort of nervously sitting around seeing who's going first, but I think we will see some good momentum in the second half of this year.
Okay, because obviously one of the strengths of the business, particularly if you look over to the student accommodation side, is that you strong forward sales to underpin the strength of the business and mitigate risk. You've obviously sort of held back in terms of putting some of these sites onto market from the build to rent side. Is this because you see an opportunity to achieve higher prices if you wait a little bit longer?
Yeah, definitely. And I think the site we're putting out to market at the moment, a scheme in Sutton that we acquired at the back end of last financial year, we've managed to get a planning gain on that from 130 units up to 165 units. We're now putting that out to market. We expect some strong interest on that. So we'd expect to sell that asset during the latter half of this financial year. In terms of the development agreements that we're working on, we see that as an opportunity where our institutional clients and students are bringing us land opportunities and asking us to step in as the developer and contractor. And again, we can see that as being another opportunity to grow that business segment within our group.
Phil, a great set of results. And the margins look to be at record levels, particularly in the student accommodation sector. Are these sustainable? And if not, what made them so exceptional?
Yes, I know. Obviously, extremely pleased with the results for the full year. Good growth in the top line revenue to just over 300 million, and the gross margin increased to 21% overall. So, very good progress in the gross margin. Very much driven by our student accommodation development operations, but also a full year contribution from the fresh student living business, which has generated a margin, continues to generate a margin in excess of 60%. I think it's worth noting that the strong margin in the year has been helped really by the location, the quality of location of our student developments, and in particular a development that we completed in London in the year at Black Horse Lane in Walthamstow, which delivered a very strong margin in FY17. So going forward, we continue to appraise our development opportunities to try and achieve a hurdle rate of 20%, and that really is how we continue to drive the business forward, and the margin can therefore be assumed to be at or around that 20% as we continue.
Okay, excellent. Then moving on, how are you finding the availability of labour and suppliers? Obviously, you're building up a nice cyclical balance between the student accommodation and the build to rent. Is that helping?
I think the important thing there is that our supply chain, in terms of subcontractors, many of those have worked with us over a considerable number of years, and it's a very sort of tried and trusted supply chain in that regard. So in terms of labour, we're not seeing any particular issues there. I think the supply chain that we use, the labour force there is largely UK based as well, rather than sort of European or international, and so no major concerns in that regard.
If we then move, touching back onto margins, residential, which has perhaps taken a little bit more of a back seat as student has been so successful, but it now looks to be doing particularly well and showing strong margins there. Is the success of that part of the business set to continue?
Yes, I think we are optimistic about the prospects for the residential business. We continue to bring through some of our more historic sites into development that have been owned by the group for some while, but we're supplementing that by adding new opportunities in the broader northwest. I think in the year to FY17, we completed some sales on legacy sites that were at a nil margin. But if you exclude those, the underlying margin performance for the residential business was about 25%, And again, we see good opportunity there to maintain that margin as we go forward and bring through those new opportunities.
Moving on then to Fresh Student Living, you've got 16,000 beds there under management, but there was part of the announcement touched on the potential loss of 5,000 of those. Could you give us a little bit more detail?
Yes, by all means. Yes, indeed, we do have currently just over 16,000 beds under management with the Fresh Property Group, which is an increase from 12,300 student beds under management in FY17. So very positive growth there. We do understand that one of our clients, the Curlew Student Trust, is in negotiation to sell a portfolio of its assets comprising 15 schemes, just over 5,000 beds. It's early days yet, we don't know quite what the conclusion of that will be, but we thought it appropriate to flag to shareholders the possibility that the management of those 5,000 beds could be taken in-house by the potential purchaser. I think compensating for that, should the position of Fresh be terminated on any agreements there, we would be fully compensated for any unexpired period of those agreements. And the positive news from our point of view is that Curlew have announced the launch of their second student fund, which will be a 25-year life fund and has ambitious growth plans, and we understand that Fresh will be the preferred property manager for that fund as well. So good growth opportunity for Fresh going forward.
A strong pipeline then?
A strong pipeline, yes.
All of which has contributed towards a very strong net cash position.
Yes.
All those loyal shareholders, what can they expect to see in terms of dividend growth going forward?
Yes, again, we're very pleased with the cash performance for the business. It is the model that we have is very cash generative and continues to be so. Because of the strength of the cash performance in the year and the earnings, we did increase the full year dividend to 6.6 pence, which equates to a 10% increase on the prior year dividend, a final dividend of 4.4p. Going forward, the board has taken the formal decision to move to a 2 times dividend cover policy, which will lead to a progressive increase in the dividend through to FY19, at which point we will implement that policy fully.
That all sounds very encouraging. Could you give me an outlook for the business going forward?
Yeah, as I said, I think the business is in the best shape, best position that it's ever been. We've got 4 mainstream business segments, all doing extremely well. Student is the core business. That is there, established, great visibility, full visibility for FY18, great visibility for 19 and growing visibility for 20. Build to rent, we're seeing the growing momentum in that, so I'm confident that we will make good progress on that during this year and really set that part of the business up for future years. Fresh Student Living continues to do well, and the housing residential part of the business is also doing well as well, so we're really confident for the future and the outlook for the group.
Lovely. Well, thank you for joining us.
Thank you.